What's up, guys? It's Cash Flow Cart. We should have a pretty fun and entertaining video today. Lately, it's been a lot of like portfolio management, tracking my trades, tracking the portfolio. Today, I'm going to give my take on how to invest $10,000 for ridiculous income. I've seen a lot of different types of videos like this. We'll look at some of the other thumbnails actually. But before we get into that, we have a few announcements. First off, guys, I have achieved a goal of $60,000 in the investment portfolio, the dividend growth portfolio. If you guys have been with the channel, kind of my short-term goals have been to hit that $2,400 annual income mark that chalks up to be $200 a month, as well as that $60,000, total portfolio value. And we have done both of those things kind of almost back to back. I went over in the Hershey video a couple strategic moves, and some net new capital invested took me from like a 192 monthly average. It took me up to 204. And then I did end up taking some Microsoft shares off and reallocating. Now I am at that 209 monthly average, guys. And guess what this means? As dividend investors, anytime you hit a goal, anytime you reach an important milestone, you get the satisfaction of setting a new goal. Okay, so that kind of sounds a little silly, but that's what this game is, guys. It's going after one milestone, boom, checking it off, and now it's going after the next milestone. For me personally right now, I hit that $2,400 annual income goal, and I hit that $60K total portfolio value goal. Now I'm going to be a little more aggressive, I guess, but it seems like it's the natural order. My next monthly average goal is going to be $250 a month in dividend income. That comes out, that's going to be $3,000 annually. Okay, so on a 12-month span, I'm aiming for $3,000 right now. And I'm going to get there from dividend growth, so companies I already hold raising their dividends, as well as net new capital invested. I'm going to try to maximize both. I'm trying to not reinvest my dividends into, the same securities all the time, but use my dividend income, with my net new capital and try to continue to grow this portfolio aggressively. As always, I will keep you guys updated on the channel. And then my next goal for portfolio value, I want to say, I want to get to 100K. I've really been chasing that $100,000, cash equivalents net worth for some time now, and I think it's time I really, get past that finish line. The reason why that 100K, that six-figure mark, is so big for us is it's kind of, I guess, a stereotype to where, the first 100K is blank, but you got to do it. That's kind of how I feel. Not only will that 100K be good in terms of I will really start to see the compounding in my portfolio, but guys, by the time you get to 100K in this journey, the lessons and the wisdom you've gained along the way is truly going to be, priceless. And if I have to make a prediction, I think once I get to 100K, I think it'll be much quicker to the $250,000 than it was from 0 to 100. That's my prediction. So, we'll see. We'll keep you guys updated on the channel, but this is a lot of yapping about that. One other announcement I do want to make, guys. I'm filming this on July 11th, and I'm currently living still in my, where I live senior year student housing. And it's a studio apartment. It's really nice. There's a lot of good amenities. but it's a little tight. It's me and my dog here, Mia. You guys have probably seen Mia. But on August 1st, I am moving to a new place. I am super excited. It still is, a one-person apartment, but it's much more spacious, higher ceilings. It seems, it wasn't necessarily built more recently. It was built in 2019, and I think this was built in like 2021. But it seems nicer. It seems like they, didn't cut any corners in the construction. It's a great area. I'm not going to be living like right in a college town, and I'm really excited. Anyway, the reason why I share that is I should be able to get like, a real office setup, a real, studio, office, man cave type of thing. So it's going to be awesome. I'll for sure do a tour when I move in there, but we need to get going, guys. So I wanted to film today. I was kind of going through the original like business plan for this channel, and just looking back at some video ideas I haven't gotten to, and I decided I want to do my take on how I would invest $10,000. I think one that inspired me for this video, I said for ridiculous dividend income. This is a channel I've followed semi closely throughout the years, and actually when I started my journey, this was like kind of the first YouTube channel that really resonated with me. It's called PPC Ian. Yeah, wow. He has videos as long ago as 14 years ago, so he's been in this game for quite some time. Hopefully I will be able to follow in those footsteps, but he's got a lot of good content. Check him out. Definitely if I get to the point of like interviewing people or anything like that, any collab things, I would love for my first one to be PPC Ian. So yeah, he usually like replies to DMs and stuff too, so it seems somewhat feasible. Anyway, my inspiration for this video came from him, but there's a lot of like super clickbaity type of YouTube videos that address this, and I want to give my take on it. That is, if I had $10,000 to invest, I would go the route of dividend growth investing, guys. If you're unfamiliar with what that means, essentially dividend growth investing to me, I'll put it in, my own words, my own definition, is, finding undervalued stocks that pay a better dividend yield than average, but they also have the free cash flow to support growing that dividend in the future. Okay, so essentially what we're going for with dividend growth investing is a stream of income that's going to grow year after year into the future, as well as we're going to get capital appreciation because we're picking, undervalued stocks. That seemed, I don't know, I hope that sounded, pretty good. Those were my own words, guys. But let's get into this answer. And I kind of want to take this a different way than I think a lot of people do. Anytime I've watched some videos like this, I think a lot of people are like, okay, 4 or 5 stocks, you want this sector, diversification here. I'm going to take this kind of a different direction, and I want to propose this to you guys. If you have $10,000 and you're starting out from zero in your dividend growth investing journey, I don't think it's a much different mindset than if you have $1 million in your account and now you have $10K to invest into it. And the reason why I say that is because if you are a dividend growth investor, you've put together in your head that you enjoy this, you're motivated by this game, but you also accept that this is going to be a long-term process, okay? There's going to be lessons. We're not going to create dividend income that can sustain, a glamorous retirement. We're not going to be able to do that in 1 year or 2 years, guys. It's going to take a long time. It's going to take a long-term commitment. And so here's what I would say. If I had $10,000 starting from zero, I would do it no differently than if I had $10,000 to invest today right now in my account that's already kind of, established. But I would pick one or two opportunities and I would add to them while they were undervalued. And we will go through kind of what that looks like, guys. Just for sake of, consistency with what we've been covering on the channel, I'd go for Hershey and I'd go for Altria. That's ticker HSY and ticker MO. For simplicity's sake, guys, I'd say I'd put $5,000 in each of them. And we will go ahead and, look at those stocks from kind of a broad perspective, as well as, what that portfolio could look like in the future. So, looking at Hershey first, guys, and again, these are stocks I'm buying right now with $60K in the portfolio. If you're starting from zero and you have $10,000 saved up, you're still going to want to target opportunistic companies. You're still going to want to kind of have that same long-term view, whatever stage you're at in this game. Okay, this is not something where it's like you can build some perfect portfolio with $10,000 and be happy for life. I'm sorry to tell you, but that's just not the case. Chris Crone, how to invest $10,000 and become a millionaire, I'm sure that's I'm not even going to say anything. Let's not get distracted. So I'd go for Hershey, and I'd pick Hershey because it has a wide moat, it has great free cash flow growth prospects, and it's undervalued, okay? So again, I'm not going to beat a dead horse with this. You guys know my favorite valuation metric, apart from just, using some technical analysis, my favorite metric is price to free cash flow on a forward basis. We can identify Hershey, 13.7 right now. That's that ratio. That 5-year average for Hershey is 24.41. That could suggest Hershey is 44% undervalued. So with my $10,000, I'm finding undervalued companies and I'm investing in them. And that's not even if I have $10,000 or if I have $200 to invest. I'm doing kind of these same things. I'm trying to get so systematic about my approach to this that that I can focus on the lessons that are in front of me, and I can hone in kind of what type of companies are in my bag, I guess, for lack of a better term. So today we're not going to go through every single fundamental. I'm sure you guys are tired of that. But, I'm picking my opportunistic guys. For Hershey, that's going to give me a dividend yield of roughly 3% starting and a 5-year growth rate of 12.15%. And if I pick Altria as kind of my other guy, I said maybe I go 5,000 and 5,000. Let's see what that looks like for Altria. I don't know what the valuation metrics look like for this one. You can see here the price to free cash flow on a forward basis of Altria is 8.86, where that 5-year trailing average is 9.85. That could suggest, 10% undervaluation. I do want to mention, while on Hershey we see 44% undervalued, and Altria we see 10% undervalued. Don't get too caught up comparing kind of apples to oranges because, Altria is going to be a lower beta name than something like Hershey. Typically something like Altria in kind of that, sin stock, tobacco, wide moat, high barrier to entry kind of space. It's going to get a little lower beta, and it's going to get a little more depressed multiples valuations. But let's look at kind of their dividend metrics for this one. On a forward basis, Altria's dividend yield is 8.35%, and their 5-year growth rate is 4.14%. Let's see what kind of this may look like if we built a portfolio with these metrics. So we'll go, here we are, the $10,000 starting principal. I don't know if for modeling purposes we want to use an annual contribution. I guess we'll start without it, and we can we can play with it for we can adjust it a little bit. We'll go no taxes, guys. I encourage you guys to try to plan ahead, months ahead, and, pay your taxes out of pocket if possible. It's going to be a little better than dipping your toes into your portfolio every single year. Initial dividend yield, again, we'll meet in the middle somewhere. So we got 3% on Hershey, 8% on Altria. So I guess we go 5.5% starting dividend yield. Again, we're just meeting in the middle. This is simply for sake of modeling. Same thing here, expected annual dividend amount increases. Hershey's looks pretty aggressive here at this 12.15. Altria is a little bit slower, however, still outperforming inflation at 4. So I say for this, we leave it at 7. I guess I was messing with it before this video. We'll leave it at 7. Annual share price appreciation. I mean, the S&P averages about 10% a year historically, but, Altria obviously is a slower grower than that. And as of late, Hershey's been a little more volatile than the S&P. So this is kind of a tough one to fill in. We'll go with 8. And we'll see what this would look like after 20 years if we put our $10,000 in, and that's it. How to invest $10,000. That's all we do. Calculate dividends. Okay, so after 20 years, our ending balance, and this is with, reinvested dividends. Our ending balance is $118,000.80. Our total return is over 1,000%. Our average annual return here is 13.14%. And at this time, our dividend income will be $5,484. Wow, that's pretty impressive, guys. So from that one-time, investment of $10,000, after 20 years, we're able to generate over half that in dividend income. That's pretty impressive, right? But, I do want to get through our heads here. This is not gonna support, a full retirement, guys. This is a long-term game, and I think in order to find purpose in this game, in order to improve your skills and grow the portfolio kind of to its maximum potential, you're going to need to contribute money every year. And let's say we do start with the $10,000, we save that up. What type of annual contribution are we looking at off that? I want to say we do like, $2,500, okay? Annual contribution for 20 years. Remember, this ending balance here was $118,000, and the dividend income was $5,000. But, that's if we stop at the $10,000 and we don't continue to, build this portfolio. Let's see what happens with the annual contribution, guys. Now, all of a sudden, we're looking at $321,000 and $15,000 in annual dividend income today, guys. So, I guess the purpose of this video is this, guys. This is not some sort of invest $10,000, set and forget. This game is about, building your system. Whether you're at $0, you're still looking for the best opportunities that you can have in your portfolio long term. If you're at $320,000, you're doing essentially the same thing, except now you have, years of experience, and odds are as you go, your results are going to get better and better. Does that make sense, guys? So, I wanted to give my take on kind of, this 100x type videos we see, or how to invest $10,000 for ridiculous income. I even like this a lot, but I do want my channel to be, a space where we all realize that we're all on a journey, okay? This is not some boom investment trade or swing trade. This is a journey where we support each other and we continue to develop kind of what works best for us. And, year after year, it's about continually finding those opportunities and adding to them aggressively. And, with that time, we are going to meet our goals, okay? And, year after year, these goals are going to get higher and higher and more impressive. And this estimated income is going to become, more and more meaningful, guys. And that's kind of the message I wanted to get on here and spread today. I know this video was a little bit, I don't want to say unorganized, but a little bit spontaneous. But yeah, that's kind of what I wanted to get across today, guys. Again, thank you for all the support. I can't wait to get into the new office. I won't have to have my, folding bed as the backdrop. I can actually set something up, hopefully a little more professional. I'm Cashflow Cart, guys. I release videos every Monday at 6 p.m. If you're not yet subscribed, please feel free to hit that subscribe button. And if you made it this far, hit the like button. I will catch you guys in the next in the next one. Let's build wealth.